Hi guys, welcome to the mentor session. This week I'm going to do something on the importance of value. Now when I talk about value, I mean in terms of market profile and looking at what value on a profile will tell you and how this is important and how you can create a trade around it. Sometimes I think value areas get dismissed or are just seen as purely a different way of identifying a level that you can pick. Value area high, value area low, VPOC being the highest volume traded within it, and they form three levels, and people don't look any more into that, and they're just a way of forming different reference points. But it tells you so much more than that, and it's often not those reference points that really matter. It's about the shape of value or the movement of value. So what does it really show you? What value is really showing you is where the majority of people believe value to be. So where is best for people to get business done? So think about this, if you're a large participant, you want to trade at the prices where most other people trade because you need to get your business done. This doesn't necessarily mean it is the best value price that you could possibly get, but you can actually get your business done. What this means as an individual, and you have to remember this, that this is value from a profile is showing average acceptance or average agreement on value. Doesn't necessarily mean that this is good value for you, and trading around that price doesn't mean you've got great value for something. Think of buying a TV. If every shop sells it for around about the same price, that's suggesting that if people are buying them, that's accepted value for that TV. But you may not believe it's worth that. So that's not good value to you as an individual. If it goes on sale, all of a sudden, now you've got the value that you want, and that's an opportunity to buy the TV. This could be a short-term sale to sort of drive business, and the price goes back up. All of a sudden, you now look like you've got a decent value TV there. So this is the point, that value gives you an average. This doesn't mean it pinpoints where to trade. It gives you an acceptance of this is what most people in the majority of situations believe is a good price to trade that instrument. But a value area tells you more than just that. It also tells you about how much agreement there is. If you've got a very small value area, it's a nice balanced out, got a profile that looks like this, nice balanced value area here. What that's showing you is that approximately 70% of trade has all happened within this zone. That's showing you quite clearly most people agree value to be there. Whereas if you have a much wider stretched out value area, then yes, there's agreement and most people believe that good value is in here, but this is so much bigger, which ultimately suggests that agreement is not that strong, particularly if this is a more sort of jagged, broken up value area that looks like that. Agreement is completely lacking. So what this helps you understand is the level of agreement and then the likelihood of people to act in accordance with that. If there is a lack of agreement, then what's going to happen is you won't get any more movement until agreement has been formed. Think of a negotiation. You don't get any further, take Brexit, trade going on until there's an agreement on the negotiations that are happening. But once negotiations are happening, trade can continue, or once agreement is found, then you get compression of positions because people all agree that that's good value, and then any kind of change in perspective moves you away from there. And this is where value then tells you a lot about the sustainability of a movement. And you've got to ask yourself a few questions. If you've had a new move, so let's say you've been trading in a small range, you've got a profile that looks like this, and then we trade away from it, what value is telling you now on this next day is how sustainable this move is. Now, this move up here could look in varying different ways. We could see value shifted up with the move. We could see value left down here and then a low volume move up. So that's value left behind, value shift, or you can end up with a very stretched out value area. Each of these tell you a different story about the sustainability of a move and whether we're likely to stay where we've got to up here or whether we're likely to reverse back. And then that enables you to form judgments and ideas about what's likely to come next. So it creates a sort of ability to define quite quickly certain scenarios or typical expectations, not just based on a pattern, but by thinking about what value has indicated to everyone trading. So we're going to look at a smallish sequence of events, and this was somewhat earlier, and then we'll look at a shifting of value. But what we've got here, this is one in the pound, and this is a completely balanced day. Choppy day, so this is the day balancing out, which gives you a profile that looks like this, close right in the middle. That is about as good an example of a neutral balanced day as you're going to get. This suggests that everyone is in agreement as to where value is, and it is in this zone here between 73 and 46, these two red lines. And you can see that looking at a chart, that's where most of the trade has happened. Part of the reason for this is the prior day was much, much more directional and leaves you a much less clear value area. It is wider, it is not very rounded, so it's not showing an even distribution of trade. So this is the balancing out and acceptance of value after the direction. And something you can expect. Once you get a strong directional move, people now need to decide, is this good value up here or not? So forms this. From there, and this is the important thing, when everyone agrees, you've now got a situation where the next movement is either going to push people out of position or allow people to take more position on. So let's say you get a move up. Anyone who's been selling it in here, who thinks this is good value to sell, now looks wrong. Anyone who's been buying has been shown that they're even more right and could be inclined to buy more and continue to push the move in that direction. So that would be your scenario or expected scenario out of this area, but it needs to get out of there to show that people are right or wrong. Stays in here, you could have another balancing day as people continue to believe that that's good value. Now, let's take a slightly different move. Following a nicely balanced out day here, and this is pound again, just to keep it consistent, what you get the next day is at least a morning of balance. Market balances out and gives you this kind of profile in the morning. So everyone still agrees that around about the range of yesterday is still good value to trade. Something then changes and we get this move away. Market continues to move higher, but by the end of the day, if you look at the profile here, value's been stretched a little bit, but we've closed a long way above value. And the majority of value within value, if you will, has been left lower down, pretty much inside the previous day's range. What this is showing you is this is not necessarily the most sustainable of moves. So a more sustainable move should move value with it. But what this is showing you is people are happy to trade at these prices, but not everyone agrees that that's good value to trade at. Which then leads to a new scenario. To stay up here, we need to see value shift up. If value can't shift up, then this move looks even more precarious. So the first idea is that value could shift up. And so we could end up with a balancing day up the top, accepting value higher, now allowing a movement away from value. So that could be one scenario. An unlikely scenario is that this continues higher. Most people think value's down here, so you're going to have to see a lot more people suddenly change their view to keep this going to the upside. The alternative is that if you don't have this shift in value of price, and if you don't find new buyers coming in after here, or even people trying to buy a pullback, thinking that yes, maybe value can shift higher, but they're not willing to pay the top prices, oops, then what can happen is you end up with a market that doesn't establish value up here and then pushes all of these hopeful buyers out, giving you the reversal straight back towards value. So this is, I'm sure some people will have recognised, this was the move from Monday and Tuesday last week. I should say, as I was saying, I thought it doesn't look like Monday and Tuesday this week. This is the last few days. Then what we get is, sorry, that wasn't Monday, Tuesday. That was Thursday, Friday. This is Monday, Tuesday. So then what we get is after the stretched out day value with no shift, so no shift in value, stretched day, you then get your consolidation. So this is where buyers aren't willing to go paying the top prices and are happy to let it fall back into range a little bit before trying to buy. This is what I talked about on Monday, that the 30-10 was so important, the level. We held there and we balance out. So we've now got acceptance up here, to a degree. Still a lack of even distribution of value, which indicates that this is still not a strong agreement that value should be up here. So what this now means is the next stage of this move can go either way from here, because we have accepted value up here. But because this is a much better established value area, there's more agreement here than up here, there's still scope to fall and get taken back. And this is what you're watching out for. This isn't an indication to just sell it on this morning here, in here. This is more an indication to suggest that if you start falling away from that consolidation here, below 30-10, now you have scope for the reversal back towards value. And all of that comes from the fact that 2 days prior and the day prior to that, so Thursday and Friday, value is very clearly accepted down here. One move away doesn't shift it. Another move away, it doesn't do a great job because it doesn't create an even distribution of value, so it's still lack of agreement. When you've got lack of agreement, it's going to be very difficult to keep something going. And this then leads to the possibility of a reversal. What value therefore is allowing you to do is to not put so much importance on price. Because in this situation, price has moved higher. We've held higher, we could go higher. But you're not putting the emphasis on price, you're putting the emphasis on where value is. And without value moving, it's going to be hard to keep on going. Take it back to the TV example. If everyone thinks that this is good value for a TV and the price suddenly goes up, some people will still think that is, because they were happy to pay more than the current price anyway, and they'll buy it. But chances are less people will go into the shop, and the shop will realise that they put the price too high and reduce it back down. All of a sudden, when it reduces back down, more people are willing to buy the TV back at the price it was, and back we go. So that's the kind of idea of how value shifting or not is often more important than price. Price, as I'm sure for anyone who's read much about market profile, is simply an advertisement to trade, not a reason. I'll wrap it up on that thought though, guys. Make sure you think about where value is over the coming days and ask yourself, does value support the movement that we've just seen?